So here are $3 billion companies that offer over 100% ROI. What's going on, team? It's Ricky here with TechBud Solutions. Now, one of the things that I quickly want to cover before I even show you these three stocks is that just because a stock offers 100% ROI based off of previous all-time highs, it does not mean that it has to recover to that price point, nor does it mean that it has to recover in any form of way. These three companies that I'm going to show you are considered, or at least two of them are considered to be blue chip stocks in the sense that they are very valuable companies, but they have recently pulled on back due to obviously the market recently pulling on back. I hope that not only just me sharing these three stocks can make you aware that you don't need to invest into very aggressive or risky stocks to actually make money, but it could encourage you to kind of look back into whatever companies you were previously invested in and to revisit the idea of, is it time to reinvest into them, or to consider taking time to actually formulate a plan based off of the ROI potential that they actually offer. So I hope that you learned something new. If you do, please consider dropping a thumbs up and subscribing if you feel like we earned it. So let's go ahead and jump right to it. One of the first ones that we're going to talk about is NVIDIA. NVIDIA is one of the market leaders in microchip manufacturing, and you guys can see that it's been forming lower highs and lower lows. As of right now, it's not showing any indication of a recovery as it's still trading below the moving average. With that being said, it's not just NVIDIA itself, but it's also AMD. I just picked NVIDIA as it's the larger of the two. But based off of where we're at right now at 170 a share, based off of previous all-time highs, which was just really late last year at 346, it offers 104% ROI. Now, one of the main things that I would like to look for is for this thing to actually begin to indicate signs of higher highs and higher lows above the moving average. I'm a big believer that when something offers this big of a upside potential, there's no reason to try to nickel and dime an opportunity. One of the worst things that you can do is enter a position early hoping for it to continue to uptrend, but then it ends up just getting rejected, right? You have to respect the overall direction, and it doesn't matter what indicator says what. The thing that matters always most is direction and price action, and we definitely just have not been able to get that direction above that moving average with those higher highs and those higher lows. But let me go ahead and move on to the next one, Tesla. I'm sure a lot of you guys obviously are well aware of Tesla itself. Ever since its acquisition, or Elon's acquisition of Twitter, Tesla has been on a free fall, sending it to lows or 52-week lows at 178. Now, one of the things that we always say is the cheap can get cheaper, meaning that Tesla can continue to sell off to lows of 150, 130, which is why we're, always like to encourage our beginner traders to formulate a trade plan or an investment plan and to take into consideration position size, right? If you buy 100% of something at the very bottom of what you hope to be the very bottom, you're hoping for the market to recover right away, right? That's your only option. If you take a small position of something, let's say that you buy 5 or 10% of a stock as it's oversold, even if it does sell off, at least you can tolerate the time that it will take for it to actually recover. So Tesla, from where we're at right now, I thought it would be worth having that conversation. To previous all-time highs at 414.50, offers 130% ROI. Again, if you were to invest $1,000, you'd walk away with about $1,300. $10,000, you'd walk away with about $13,000 profit, or $23,000 overall on your account. I think that's the amazing thing about this, is that some people view a recession as a risky time to invest, but if you look at every previous recession, it's always viewed as a missed opportunity, right? So it's all about being able to tolerate the time that it will take for the market to recover. And obviously things can get worse before they get better with this up and coming CPI data report, with this up and coming Fed interest rate hike. So there's no rush into this. The thing is, now is the time to formulate the plan. Now, when markets begin to recover, but now is the time to formulate the plan of when the market does recover, what stocks are you going to invest in? Where are you going to buy? How much are you going to buy? Now is the time to ask yourself those difficult questions, not when you feel like you're missing out. There's too much emotions. You're already late to the rally, right? There's nothing wrong with being late to a rally if you have a plan in place on how to take advantage of it. And again, we're trading below the moving average, forming lower highs, lower lows. There's no true indication of recovery. And this is why, again, we're talking about price action as one of the most important things, but just wanted to make sure that I talk about it as it offers 130% ROI. Now, again, I don't know if you guys have heard about this company. It's called Amazon. It's the world leader in e-commerce, right? And from current price points, believe it or not, to previous all-time highs, it offers 111% ROI, at least for myself, right? There's Nothing that's guaranteed in this world, but at least for myself, I don't see Amazon going anywhere anytime soon. It's as close to a monopoly as any other company out there. Of course, the cheap can get cheaper, but again, it's about being able to put yourself in a position now that you can tolerate. And then when it does begin to indicate signs of recovery and breaks above the moving average, and actually, overall markets begin to get better as the Fed begins to pivot, right? Then it would make sense to really begin to step on the gas. But I really like Amazon at this price point, at least as of now, right around $90 a share, 111% ROI. Imagine being able to look back and be like, how'd you make all your money? Did you invest into a very risky play? No, I just invested in companies that were very undervalued based off of current market conditions, right? And again, always the cheap can get cheaper, but if you look at Amazon, we're literally trading back to 2018 levels. If you look at Tesla and where we're at right now, we're trading back to 2020 levels. And if you look at Nvidia, we're trading back at 2021 levels, as that's when it really began to take off, as it overcame, I think it was INTC, which is Intel, right, in a world leader in micro chip manufacturing. So just wanted to share those three with you. And again, just because I talk about these three stocks in no way does it mean that you have to invest in them. My big focus within this video is just to encourage you to take time now to begin to find oversold and undervalued companies because of recent market conditions that are good buys, right? And I can't stress this enough. Think about it. Every other recession, every other market pullback, if you look back to it, it's viewed as a missed opportunity. Don't allow this to be the same thing. Don't buy more than you can actually tolerate, even if you just buy one share, right? Do it in a position with a position size that you can actually manage and tolerate. I think that's the most important thing, that if you've ever wanted to get started in the stock market, I mean, you've seen it firsthand even with something like Amazon, right? We're literally trading back to 2018 levels. So every gain that's been made in the past 4 years from Amazon itself has literally been wiped out if you've just held. That's the opportunity that's currently presenting itself, right? It's not that it's a perfect entry, right? It's just that it makes sense. It's kind of just like the house that I bought when I was 20 years old back in 2015. I bought that house for $176,000 in Arizona. I'm sure I had neighbors that bought their house for $150 or anywhere from 120, maybe even 100,000. But guess what? That house is now worth $550,000. And because of that decision I made in 2015, it wasn't that I got it at the best price point, but I got it at a good deal, and I knew that markets would continue to indicate signs of an uptrend. And that's exactly what we're doing here, right? We're not just throwing our money at something and hoping that it grows, but we're putting it in places where it makes sense. So again, if you have any questions, you can feel free to reach out to me, and that's going to be via Discord, and that's that first link down below. If you guys want to be able to watch me trade live every day, that's my Learn Plan Profit group, and that's that second link in the description. And if you want to learn more about our giveaway and how to enter, that's that fourth link in the description down below. Like always, let's make sure that we end the year on a green now. Take it easy, team.